Welcome back. I'm Pratap here. Today is the 27th August 2024. In this video, we have very good learning to understand the concept rejections, price rejections from the zones, away from the zones. And yesterday we have identified two high liquidity zones. And before we analyze the performance of the high liquidity zones, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab posts, and here you have a post that will take you to all the training lessons. So here you have a YouTube playlist link. You click on the link, and now we are into the playlist supply demand zone price action course. So far we have released 24 training lessons. From these 24 training lessons, we have 62 training videos are there. So you need to start learning. You are learning from lesson 1.1. For that you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So please join in the Telegram channel from the description, video description. It will be helpful to you each time when we release a new YouTube video or any other important updates we will provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in our yesterday's NeoStock software. With the help of NeoStock software, we identified two high liquidity zones, and both the zones are from daily time frame. 75 minutes time frame, we don't have any zones yesterday. Out of these zones, you have one trade. There is also one more stock you can take a trade, but not a high liquidity zone trade, but that is based on the concept rejections. So that's why I told you this is a good example for learning the concepts or understanding the concept rejections in much better way. And Divi's lab we got a trade, HLQ trade, but it is an aggressive trade. You already learned aggressive trade concept in lesson 21. And Divi's lab is a high liquidity daily supply zone. And when this zone is created in the year 2020, so here we have a rally, we have 1, 2, 3, 4, 5, 6 base candles and a drop candle. But actually software has suggested this as a rally candle because there is a hidden gap. The moment you add the hidden gap, it is a rally, 3 base candles, drop. That way also you can draw the zone. It doesn't make much difference. But this zone is created in the year 1st November 2021. What is the problem? Fine tuning up to 5 minutes is not possible in this area unless in the recent price action prices entered and there they created any fine tune zone or some price actions based on that aggressive trades we can plan. That is what happened today. But first let us understand how I fine tune in this area. At least up to 15 minutes time frame I am able to fine tune. So this daily time frame I am changing to 75 minutes time frame. So in the 75 minutes time frame we have rally candle, base candle and a drop candle with program. And after that prices entered, came very close to the digital line. It didn't cross the digital, but they came very close to the digital line and again came down. So probably 5 minute zone also, this zone would have been tested already. So that's why it's not as advisable to plan a trade here. But anyway, let's look into the 15 minutes time frame also, how we fine tune this zone at 15 minutes time frame. So here we have a drop candle, you have base candle, but this is a medium size leg candle. Anyway, it's part of the base because earlier there is a base, and then you have a drop candle. This is the 15 minute zone, drop base drop. And previously prices entered into the zone at the time again. See here, One more rally candle is created, a base candle, and again another medium size leg candle, but this is also part of the base. Then again we can draw a zone here, 15-minute zone. Here there could be a fine-tuned zone, but when it is, this is again 4th November 21. 4th November 21, we don't have any 5 minutes data available at TradingView. So that's why we have a disadvantage of fine-tuning this zone. But what I did in the recent price action, I wanted to look for any fine-tuned zones and observe the recent analysis. It is a very important for you. It's a good learning for many people. Even some of you are probably might be using a supply demand zone for the last few months or maybe last few years. Still it is going to be a good learning for you. Okay, in the recent price action, prices entered into the zone. What is the first thing I should look for? Is there any 75 minutes fine-tuned zone? So that's why I went to the 75 minutes time frame. Here we have a rally base drop, but this is already pierced. So we can't use this zone anymore. And here we don't have any 75 minute zone. Generally what we do? We just leave the stock, thinking there is no fine-tuned zone. But you should not forget, sometimes there are higher chances of getting aggressive trades also possibility. Aggressive trades are not fine-tuned zones. They are direct 5-minute zones or 1-minute zone or 15-minute zone. Some price action clues will be there. That price action clues will be helping us to take the trades. Instead of going for a fine-tuned zone, the direct, the normal demand zone or supply zone, you can take a trade inside the high liquidity, provided they are supported by the price action clues. That is what you learned in lesson 21, how you can take aggressive trades. But price action clue is very, very important. And price action clue should be very strong. Otherwise, there are chances that aggressive trades may be violated. So what I did, I went to the 15 minutes time frame. 15 minutes time frame, here I have seen prices were moving up, entered into this zone. And after that, they were coming down. While coming down, see here, prices came down. And all of a sudden, there is a push. And there is a rejection. Rejection, you need not look for a single candle. Many beginners will make this mistake. A single candle rejection is there. We may think, okay, you can accept. But single candle rejection may work or may not work. But the risk is very small. There is nothing wrong in taking trades based on even single candle. But what you have to do from that candle, what is the price movement? See here, this is a rejection and all these candles are continuation to this rejection. That means prices, each candle, prices are moving away from this zone. Okay, where is this zone? Because I have already drawn this zone, you are able to see. But if I delete this, where is the zone? There is no zone. But why prices are started pushing down from here? There could be a zone in this area. Because of that zone, prices are coming down. This is the way you should understand. That way I was able to identify this zone, 1-minute zone. There is a strong rejection and continuation to that. The rejection, continuation to that, candles are further moving down. That means it is the effect of this rejection. I can say cascading effect. Because of this rejection, next candles also further going down, down, down. And a continuation to that, see the move. It's a very big move. Further it went. After that there was some movement, but later again prices were further moved. See, from here to here, till this is the bottom. From here to here, the reason is this is the zone. But this zone, how to identify? That way what I did, by seeing the rejection, I went to the 5 minutes time frame to find if there is any 5-minute zone. But 5-minute zone also, I didn't find any zone here. But see the rejection. It came very sharply, it came. 5-minute zone, the rejection, you can see it is even more sharp. After that with a gap down and further prices were moving down. And continuation, you see how they came down. For this entire fall, who is the reason? This candle. This is the price action clue. A strong rejection. Prices are moving away from the zone. This is the price action clue. But without supply demand zone, you cannot take a trade. Without supply demand zone, okay, this is a supply zone. Without supply zone, how do you identify entry? How do you identify the stop loss? You can't blindly take the trade. If you take a trade here, if price comes near to this, if you take a trade, where is your stop loss? So that's why I went to the 1 minute time frame. This is the 5 minutes. I went one more time frame below. That is 1 minute time frame. And 1 minute time frame, we have even more clarity here. And here we have an excellent zone. We have a drop candle, medium size candle. Drop candle is a leg-in. You have a base candle. Again, you have a ERC candle, a drop candle. This is the leg out. Drop base drop, but this is already pierced in this candle. But who is holding these prices? This is the zone, drop base drop. He is holding the prices here. That means in this area there is a very strong order flow, and moreover the risk is very small. This is a 1 minute zone. The risk is very small. Even if your analysis goes wrong, the loss you are going to get is very, very small. But this is an aggressive trade which is part of the daily high liquidity zone. We don't have a fine-tuned 75-minute zone. We don't have a fine-tuned 15-minute zone. We don't have a fine-tuned 5-minute zone. Directly we have drawn drop base drop at 1 minute's time frame because of the price rejection. See, we didn't look into single candle here. We looked into the multiple candles, how continuation to this, how the price action, that is what we observed, and how much prices were down after that. See, always there will be swings will be there. Some reactions. From here prices moved again, came down. You have to understand it is making lower lows. Lower low, lower low, lower low, lower low. This is again lower low up to here. This is also lower low. Further it came down. Now prices made higher until this. But who is the reason for this entire push up to here, from here to here? This is the zone. So by considering these points, definitely you can take some risk, a little small risk you can take, and you can plan a trade. See today what happened? The prices just entered and you got the trade is triggered, and see how it pushed the prices. Till this 15 minutes demand zone. Here you got the entry at 9 o'clock 20 minutes candle, and it reached the target at 11 o'clock 21 minutes candle. Almost in 2 hours your trade is completed. Of course, this is a pierced zone, but okay, pierced zones you can use for the target. This is the 15-minute zone. Here you have a rally, 6 base candles, and a rally candle. After that, today, this is the morning 9:15 minutes candle at 15 minutes. But actually, we got the trade at 9 o'clock 20 minutes candle. At 1 minute, that is what we have seen. This is the 9 o'clock 21 minutes, 9 o'clock 21 minutes candle, we got the trade. And 11 o'clock 21 minutes candle, it reached the target. Exactly in 2 hours, the trade is completed. At 11:21, 2 hours. So this is the 15 minutes target, it achieved, it reached. Because already this zone is pierced, there are higher chances again till the distal line the prices will move. But we can't take that risk. So that's why the moment it is entered into the zone, those who have taken trade at the distal line, they would have got much better profit. But still, already from here up to here, it is a high profit. Okay, how much profit we got? This lab we got 19,110 rupees profit. This is 11% ROI, and this trade is based on the price action clue rejection. Actually, proper reason I have to draw. This is the reason. Aggressive trade. Price action clue, rejection. Near 1 minute supply zone. Inside, not 75, this is a daily HLQ zone. In daily HLQ supply zone, we have a 1 minute supply zone, and this is an aggressive trade because it is not a fine-tuned zone. But still we have taken the trade because there is a strong price action clue is available. Because of that, we have taken this divi slab trade. So this is a good example for those people who already learned the concept rejections in lesson 21. And next one, we missed the HLQ trade, Adani Ports, just 1 rupee 50 paisa difference we missed the trade. Adani Ports already explained earlier how I fine-tuned these zones. I didn't made any changes here. Few days back, I already explained Adani Ports. Maybe 2 days or 3 days back, HLQ zone analysis, I have fine-tuned. Today, prices came very close to this zone. We have an entry buffer, the blue color line. To this entry buffer, it is just falling short of 1 rupee 50 paisa. If it would have fallen 1 rupee 50 paisa, we would have got a good trade. But see how sharply it moved up. And again, how sharply it came down. Rejection, price action clue, rejection. Okay, this is a HLQ trade. We missed the HLQ trade today. And the last candle, the 5 minutes candle, you will get clarity. See, the last 5 minutes candle, prices came almost, it is about to touch this fine-tuned area. But we can't take a trade. The last 5 minutes of market closing hour. But still you see the rejection. After that, how sharply prices moved. Prices came down and again moved up and again came down. Look into the 1 minute. See here. It came very last 3 o'clock 26 minutes. It came very fast. See how sharply it moved up. And what could be the value here? Say for example, this is 1,475 rupees 65 paisa. Say 4,076, say, let us say. And up to where it reached? 1,479 rupee 45 paisa. Almost 4 rupees move in just last 4 minutes of the trading session. Last candle, again it came down. But the point you have to understand how strong this zone is having, the order flow. That is very, very important. So intraday traders missed this trade. Probably short-term income trade traders, DIT traders, if it supports DIT trade setup, would have taken the trade. And they might be holding the prices. But we, HLQ zone trade, HLQ zone strategy is only intraday specific. You have to exit during the intraday. So that's why the last hour of the market, mostly we don't trade. Even if you trade, you keep your target till 15 minutes time frame only. 5 minutes time frame only. If anybody would have taken a trade, see, it reached the 5 minutes target. We have a drop, we have a 2 base candles, we have a drop, base, drop. The 5 minutes target, it reached in just within last 5 minutes of our trading. But anyway, I am not considering this, but I am telling you how strongly this zone is working. That means there is a very strong order flow. That's why sharply we missed the trade and it traveled up to the 15-minute zone. But see the price action clue rejections. If anybody would have looked into this sharp rejection, definitely they would have taken a trade in this zone. See the 15-minute zone. This is the 15-minute zone. This 15-minute zone is we have a rally, base, drop. And sharp rejection. And again came. If anybody would have taken a trade, see again, end of the day, before end of the day, it reached this target, opposite side. This is the 15 minutes fine-tuned area. But this is not a HLQ trade, please remember. Probably it could be a bearish trade setup related trade, but the price action clue here is sharp rejections. That's why rejections are very, very important price action clue. But if you don't understand the rejection properly, just by looking into just one candle, there is no movement towards the down, and if you take the trade, it may work, it may not work. You have to see the price action after this. There is a sharp movement. After that, the prices went down, again reached. Still, you can expect a strong rejection from this zone. Because of this rejection, we can at least guess there is a strong order flow. This is yesterday's price action, and this is today's price action from this fine-tuned 15-minute zone. This is a 15-minute zone. Inside we have a fine-tuned 5-minute zone. Okay, anyway, this is not our HLQ trade, so that's why I'm not focusing, but I'm explaining the concept price action through rejection. These are all good examples. And also I'm telling you how we missed the trade today, a good trade. If maybe another 1.5 rupee prices fell down in this stop buffer area, we would have got a trade. Later on, it could have been a very successful trade because it reached the target, 15 minutes supply zone target. But anyway, we missed the trade. We have to accept that. So this is about Adani ports. These are the only 2 high liquidity zones we generated by our software yesterday. Hope this information will be useful to you. This will be a good learning to understand the concept price action, price rejections away from the zone. So let's all meet again in our next video.